You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. The Options Insider Radio Network is sponsored by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody, it's that time of the week. It's that time of the year, time for Volatility Views. And it's our final show for 2018, which means it's time for our year-end volatility Palooza. Time to look back at the year that was all things volatility, the many gifts that keep on giving across all the broad spectrum of volatility. What's going on in VIX land and in the futures and in the options and in the underlying and in the S&P and in the other vol of other products across the board and everything under the volatility sun. We're going to try to break it down on this, again, this year-end Palooza. You guys know the drill. Every Friday, noon Central, 1 p.m. Eastern. That's when we go live, or you can hit us up on your podcast provider of choice after the fact and enjoy the vol deliciousness on your own schedule. We don't judge here. If you do listen, make sure you hit us up, questions, comments, insights. A lot of you are already playing along in our poll of polls here to have you guys play with us. You guys like our crystal ball. You like to mock us when we're wrong. You like to cheer us when we're right. We like to let you guys play along too. So we have our poll of polls up right now at Options on Twitter is the place you can go. A lot of you already played along. I'm trying to avoid all your guesses because I don't want anything coloring my opinion, because to come up at the end of the show, we're going to do our big 2019 year-end volatility prediction. So stay tuned for that. That should be fun. You guys are already firing off left, right, and center with all sorts of prognostications. You guys can play along at Options. And this time we're adding up in the ante a little bit. Whoever comes closest by the end of the year, within a point, obviously, you got to keep it some sort of rate. Can't be 3 handles away and be the closest and win, because that's not really winning. Not by our metric anyway. So whoever comes the closest within a point at the year-end close of VIX, we'll win fabulous prizes. We don't know what that's going to be yet. We'll figure out something cool. We'll get a bunch of something. Maybe we'll get a bunch of our network players and fun people to throw in additional bonus prizes. So you'll win something cool. Don't worry. But there's the bragging rights of being the champ out there, which is always fun, always interesting, always good. I need to look away from Twitter. The votes are coming in hot and heavy. I don't want to be colored at all. I need to look away. And so instead I shall turn toward my head all the way to the far east coast of Maine, where I am joined appropriately enough for this final show of 2018 by the Rock Lobster himself, Mr. Andrew G. Mr. G, welcome to the program for this final time for 2018. How are things in the land of the pit, sir?
The land in the pit, things are going quite well, quite nicely. We're launching some sheets with live vol. We're doing all kinds of cool stuff. Clients in general are pretty happy. So I think 2018 was a good year for the old pit.
That just cracks me up. I have this image when you say sheets of there's some old timer in a multicolored trading jacket, hunched over his dot matrix printer to get his old sheets out before he heads on down to the OEX pit. Don't see a lot of that going on anymore. By the way, you talked OEX numbers on our year-end option block. Were you on? I forgot. Were you on it with us yesterday? I think you were. Do you remember how many?
I was.
Do you remember how many contracts OEX did in 2018? The once powerhouse of the SIBO, the once powerhouse.
Wasn't it like 490,000?
Yes, it was 498,000 total for the year.
Used to do that in a day.
Yeah, VIX does that in a day, and OEX did that for the years. That just shows you how far the mighty have fallen. See what else has fallen, what else is going on. It's time for our volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Vol Review, the portion of the show where we do exactly that. We break down the volatility that's going on this week. We're going to do our year-end review in a little bit. We're going to kick things off, though, talking about right now, because there is a lot popping off right now here in the final week of the year. Usually you got this fun seasonality of VIX, and VIX kind of gets quiet and volatility gets quiet. People tend to go home. Maybe you have a little Santa Claus rally going on there as well. All these things usually combine to keep the VIX relatively muted, relatively quiet this time of year. This year, not so much. We're seeing VIX Cash popping up here up to, was about the 30 handle, now coming off a little bit today, right around the 29 level. About a handle or so higher than where it was last time. We're seeing most of the major indices kind of in a bit of flux. They can't decide what they want to be when they go up today. So we're seeing the Dow off a little bit, S&P up a little bit, NASDAQ up a little bit more. Things like gold and crude are kind of, oil's actually up a fair bit, over 1% today, catching a bid back up over that 45 level out there in WTI. Gold kind of unched. A lot of things kind of unched. It's kind of one of those weird markets where, of course, in this extended week, coming into week 2 of our protracted government shutdown here, so we're kind of in unprecedented times. So that's probably what's weighing on the market. Hey, we've had big sell-offs this week. We've had big rallies this week. Kind of historic moves across the board as everyone's trying to figure this thing out collectively. And today it's kind of a bit of a shrug as we're heading into yet another holiday weekend here. Of course, a lot of things popping off out here. Mr. Rock Lobster, what's popping off with your crazies over there in the pit chat? What are they slinging out there? And what was catching your eye in this week of quite a bit of volatility, actually?
Well, like I said yesterday, just the fact that for the most part, I think like Gamma, buying options, near-term options, all that was underpriced. We had a couple days, 2 days in 1 week of 10 handles in the SPY. That's quite a bit. I can't remember the last time that happened. And today we had all that activity, and we're kind of back where we started, and VIX is just sort of hanging at 30. So the only thing I could just remind clients all the time is volatility is always relative, right? Relative to what's going on, relative to what's trading. So I think clients are starting to look at stocks to nibble on, but for the most point, it's still, the bias is to owning some Gamma, owning some put flies in the index and stuff like that, that are helpful when the market just decides to, sell off 3 or 4% in a day.
Better. Yeah, when would it ever sell off 3% in a day? What are you talking about, Mr. Rock Lobster? This is crazy, unprecedented stuff you're suggesting here.
At least not this week.
Yeah.
Well, that was Monday.
Exactly.
This is a week with Christmas in it. It's like my whole head is spinning on this week. By the way, we had the Friday, Monday sell-a-thon, and then we had Christmas, and everybody's kind of grumpy for Christmas, and then the day after Christmas we rally 5%, and then yesterday we just had a ho-hum 10-handle move in the SPY, sold off almost 3, rallied 2, rallied up 2% at one time. So just like crazy swings. And it's almost like every day the market is trying to decide how bad is the recession going to be in 2019. So, so one part of the day it's okay, and it's going to be bad, and everybody sells everything. In the meantime, high-flying stocks have just gotten destroyed. And, I mean, you say whatever you want about it, but they're all at, huge, huge discounts. Now, maybe they've just come back to what I would just call a normal multiple. Don't know if a recession's on the way, but nobody is liking the rate hike thing at all. That's the reality. The market's been hugely unstable since then. Everybody says, the rates are baked in. It's baked in. The volatility is just priced it all in. And then that was like one of my blogs right before the rates. So I go, well, you can sell the juice, but why don't you wait till after the FOMC comes out? Like, wait till after, because when you sell, let's say if you're going to be a seller of premium, right? You're like, okay, I want to get that high tick right before the Fed comes out with their announcement. And what I found really is you don't give up a lot by waiting till the Fed announces and see how the market reacts. And if the market's like, okay, we keep selling off and vol keeps going up, there's no reason to sell anything because everything's still flying. So, you don't lose a whole lot by waiting, and you actually could gain quite a bit by waiting. So now I think the only thing is, all right, well, will the Fed actually raise, or at some point, let's say 2-3 weeks from now, where they come up with we're actually looking at more data now, and maybe we don't maybe need to raise as much as we thought we have, even though, to be honest, I think the idea of just sort of tightening and putting the pressure on the federal government to stop borrowing money is a good idea. They're all politicians, and none of them like working anyway, so they would rather work when all the money's free and they can spend it all they want. So that's certainly a big part of the volatility, the recession part, the fact that the Chinese tariff part now could spill over, and you just sort of have this cascade of negative effects. And until something changes to break that, the vol, will it stay at 35? I don't know, but we're just going to stay at pretty high overall, some still pretty high volatility.
Yes, we're currently in that high volatility regime right now, looking at our old friend VVIX. It was actually about 105 last show. It's actually off about 10 handles from there. It may sound kind of crazy because we have had some volatility this week, but it's only about a mere paltry 95 right now coming in to showtime. Also out there looking at, you said the VIX hovering around a 30. Also seeing our old friend, the 30-day realized out there in the S&P hovering right around a 30 as well. 29 is pretty much right around where VIX is, which usually is a good prognostication, but not always, of what's cooking out there. Just to give you a frame of reference, we were hovering at extremely anemic levels here. We don't want to get too much of our year in review, but going into that big day in October, we were hovering at about 6 in realized volatility out there in the S&P. So in terms of 1 month, so we've seen a market change in that structure just in the last couple of months. If you listened to our option block show yesterday, you know that October 11th was actually the busiest day of the year, which it surpassed February 5th and 6th and all that kind of crazy time period. So interesting things have certainly been happening here in Q4. It wasn't, a lot of the Feb-ocalypse, easy for me to say, dominated a lot of the headlines and a lot of the discussion, but Q4-ocalypse, I guess you can call it, has had its own interesting things going on. Speaking of interesting things going on, we talked last week about how we're seeing a lot of juice built into the cash in the front portion of this VIX futures curve. Still seeing continued juice out there, even more juice this week. We were at about 26.5 or so last week on Showtime. We're at about 29.5, so 3 handles higher. We're seeing that little bit of that premium of the cash to the futures extending itself this week. About a 4 handle premium of the cash over the future. We're seeing that Jan future at about 25.5 or so. So a little bit rich compared to last week. It was about 3 or so points last week. And we're seeing that Feb future has about a over 6 point premium, or I should say discount to the cash there. It's about 23, not quite 23.5 versus about 29.5 out there in the future. So the cash continues to whipsaw all over the place, but the futures remain pretty firmly backward as well. Pretty rich out here. Going out, you get a little bit more, let's say, cooler heads prevailing out here around June. We're seeing the futures around a 21 level or so. So interesting things abound, and you get back to all the way out to SEP, and they get juicy again, up to 23.5. So I guess they're baking in a little bit of juice for the latter portion of 2019. Let's look here really quickly as we keep on rolling here with the old vol view. Let's get out really quickly what's going on out here in VIX land right now, as well as you mentioned before, kind of breaking down the numbers for the the top trades and days and products of the year. VIX did well this year, but it wasn't perhaps as rock'em sock'em robots of a year for the VIX product as you might think. Certainly not compared to things like a SPY, which is always going to win in that case, but it was still much lower even than you might consider, given what's been going on out here over the better part of the year. Let's see what overall, as we go into our final show of the year, what's dominating our hot VIX charts, where the big size is in VIX land right now. Let's go to the bottom. Let's honor the meatball. Start at the bottom here. Let's start at number 10 on our top 10 hot VIX positions right now. Excuse me, is the Jan 18 put, actually. So perhaps speaking of some optimism to the downside, at least. Optimism to the downside, so pessimism for vol, with about 133,000 contracts. Number two, or should we say number 2 from the bottom, number 9 overall, are the March 37 halves with about 140,000 contracts. Those look far more relevant this week than they did a few weeks ago. And then the Jan 32 halves, number 8, 142,000. Number 7, the Ape 45s. Noticing a trend here, listeners, with about 153,000. Excuse me. Number 6, the Ape 70s. Now, usually we have to get into February. That's usually where I like to say the vol crazies come in and we see crazy bids and things like the 70 strike calls. Now we don't have to wait till February. We're getting it here in December with the Ape 70 calls. The number 6 size position in VIX land right now, the 156,000 contracts. Number 5, the Feb 40s. Again, are you seeing a trend, listeners? The 158,000 of those bad boys for number 5. Number 4, the Jan 24 is the comparatively reasonable, level-headed Jan 24s with about 170,000 of those. Number 3, the Jan 35s, 210,000 contracts. Number 2, the Jan 30s with 244,000 contracts. And number 1 with the bullet, as we round out 2018 here, are the Feb 37 halves, 314,000 contracts open. Total of about 6.75 million contracts, about 5.25 million on the calls, and about 1.5 million open on the puts. It's interesting. This is just a huge tonal shift, Mr. Rocklopson, that we've seen in the past couple of weeks, where we did see a large number of puts, 30, 40, maybe even 50% of the top positions being put positions. This week, not so much. Only one put position. Maybe folks are finally conceding, or maybe this is like a trend we've seen before too, of people just crushing away at upside in VIX land as well. What's your take here, Mr. Rocklobster, of these crazy top open positions here?
I think these trades are what people have learned over time is instead of dumping their stocks, they just buy VIX upside and then they buy equities. And I think that actually is a good trade for the next couple of months. Like buy long-term equities and then buy like long-term option contracts and equities, and then just buy VIX. Buy all of the underwater VIX contracts. And what I mean by underwater is the future's trading 25, but the cash is 30. Beginning of the week, I think, what was it, the day after Christmas on Wednesday, there was 9 handles of backwardation in the Jan future, meaning VIX was 35, but the future was only trading like 37. So, or 36. So, I'm sorry, 26. So you could just, let's say you just buy a 30 level call in VIX. That where the future's out, where the future is below the price, but the call is between the future and the cash. And if the vol continues, those futures just kind of creep up to where VIX is until expiration. So what you have a shot is you can ride VIX with actually very little real decay and then you buy, let's say Apple leap call spread, stuff like that. I've been looking at that, like Apple, Nvidia, all these stocks that just got totally destroyed. And you kind of create a funky back spread. And if we do recover, I think the breadth of move would be, we're talking 2,500 to 2,600, right? So you have those kind of hard moves up, and in the Qs, that could be 150 to 160. Who knows? Doesn't take much. And all those little backspread trades could work because, you get to lever your VIX. One VIX contract, you spend $1, $1.50 on a call, could be worth $3 or $4. That buys you a lot of leverage if you want to buy some long-term stuff against it. So I think just people get savvier over time, or maybe I just think they get savvier. And, up here, it makes more sense to buy VIX calls and underlying because we have such high volatility overall. And that's, I would call like a high volatility strategy. You buy VIX, buy underlying delta in some select equities, and you build your own little alpha, probe that way to try to create some more dollars for yourself in your trading account. But, because I'm not really a day trader, so I would prefer to wait till things get kind of stretched and then put on a more, I would say, mid to longer term trade and just let time work it out. Because I'm basically a lazy person, I would rather let time work the position out than anything else. So I think is part of what the shift is. I mean, I would say a month ago, I was looking at puts too, and I've got a bunch of worthless puts that I paid for by owning some upside vol calls, but didn't make a whole lot of money on it because I thought I was going to get a pretty, things would kind of get back to normal. Then, like, oh, okay, it's not. So I'm off to crazy town, and I'm moving forward with what I thought would have been a really like a high yielding reversion position, and then just sort of limping in, making a couple bucks. Now I restart the process over again. Like, okay, now we have high vol, extreme backwardation. It's been here for a while. Doesn't look like it's going away, but the market's moving a whole heck of a lot. So you change your idea. So it would make sense to me that people are buying a lot of that upside VIX and kind of looking for ways to position their underlying, maybe selling the 2,200 puts in the SPX, something like that, where they're selling put spreads down there, where vol's pretty high, and all of a sudden that doesn't look like a terrible trade. So the fact that the vol's high brings other opportunities in. The only catch is, of course, you have to have some dollars in your account to take advantage of it. If you got it annihilated on the way to 2,400 or 2,500 SPX, then you don't have the ability to take advantage of that.
Yeah, if you didn't, if you just did the old passive allocation and rode the market up and then rode it back down, or rode your apple back down, or whatever your flavor of choice is, and perhaps you don't have the bullets in the old gun, Mr. Rock Lobster, to take advantage of such strategery there on the old options radar. Speaking of the radar, let's hit on our old buddy VXX before we do our year end as well. VXX, Mr. Rock Lobster, maybe we'll cheat a little bit. There was a theme to VXX, certainly for the lion's share of the trading for 2018. It was to fade it, right? That's where we saw all the size all year was all to the downside on the put side and everything else. And yet VXX stubbornly refusing to play ball at the 50 handle going into showtime here, right about that level. Maybe I think a little bit off that now. Let's see. Where are we right now? Can showtime 49.25 or so. So off the 50 handle, but just ever so slightly in terms of still what's open out there. Number 1, 2, and 3, Jan 10, 15, and 5 puts with 200,000, 82,000, and 70,000 respectively. You got to go all the way down number 4 to find a meteor put, the 33 put. One of the puts that has a chance of coming into fruition, at least, with about 66,000 here. The moral of the story for a lot of these VIX downside puts, or VXX downside puts, is we've said this many times on the show, you got to take stuff off when the getting is good. These puts did work. Earlier in the year, they were very juicy, very rich, as VXX got quite anemic into the mid to low 20s, and that was an opportunity to take off a lot of stuff. I feel your pain if you didn't, because I took off most of mine, but not all of it. And then, of course, you get busy and things bounce. And so that's kind of what happened here in VXX land as well. So people out here still sitting on hundreds of thousands of these bad boys to the downside. Who knows? Crazier things have happened. They could come to play. There's a month or so left to go. but doesn't look too good. You got to go down to, let's see, you got to go all the way down to number 8 to find the first call, the Jan 50s, which are actually, go figure, at the money calls right now, which is nuts. Then we have the VXXB Jan 50s as well, XA, the non-standard VXX2. With about 40,000 of those bad boys. And the Jan 33 is number 10. So the bottom third, I should say, the top 10 is calls. So people are writing all the time, who plays in calls out there? That actually was the trade to do out here. It's back, since we're doing that, Mr. Rockland, let's just get into our trends of the year here. We'll spend the rest of the show getting into that and some of your question palooza here as well. And since we'll table more VXX talk for a minute, let's get to our 2018 just overall volatility trends. And I think it's kind of hard to argue with the one, I guess you can call it the theme of the year. In fact, we did yesterday on the option block, Mr. Rocklops, and I think you concur. If you had to summarize the entirety of 2018 from a financial perspective in one easy to clarify and quantify sentence, it would be effectively the year that vol returned. Would you conclude with, or I should say, would you concur with that, sir, as a summation of the year that was 2018?
I would concur. It's been a while since we've had a year that we've had such high highs and low lows. To be honest, I'm straining a little bit trying to think. I guess we had 2016. The start of the year was pretty. We had that high vol right at the beginning, and then everything the vol just started leaking out of the market until the election. And then we had the historic low volatility for a year, which now 2018 is done, but can you shake your head at 2017 and really like, how the heck did that happen? Like, how did that happen?
Yeah, we've had two great
and then it all went horribly wrong.
Yeah, if you want good recent examples of just how fickle volatility can be and what a fickle mistress. Just look at 2017 to 2018. We had two polar extremes, right? We had 2017, the year where everyone kept asking, where the hell did vol go? What's going on? How low can vol go was a repeated question throughout the entirety of 2017. So the theme for 2017 was the year that VIX died. And then the theme for 2018 was the year that VIX returned with a vengeance. Here, and you can't say that was unforeseen. We had talked many times in 2017, this is going to come back. And when it comes back, it's probably going to come back pretty hard. All this talk about the volatility feedback loop and everything else probably is not going to hold it back. It might even exacerbate things. And that's kind of what we saw, of course. February was the beginning of the end of the I should say, the VIX and volatility being in the downside, but not the downside for trading and trading around VIX. In fact, if there's a second theme to the year, Mr. Rock Lobster, in terms of like trades and trends, and we see a lot of prints going up here on the show throughout the year, listeners. We analyze a lot of trades, a lot of activity. There were a couple of trends that I saw. Maybe you have some different ones, Mr. Rock Lobster, but one of the ones I noticed, and we talked about it even last week and the last couple of weeks, is that even though vol is back up, vol is high, vol is rich, shorting vol was still the hot trade of the year. I mean, we just talked about it. A listener wrote in with a chart of how many VIX puts were open still, and we're going to go out worthless on, I think it was Jan, maybe D's expiration for VIX. There was a ton. It was like 1.6 million. So people have been fading the VIX aggressively, and we also have talked. There's been a lot of upside printing, but a lot of that has been fading as well. A lot of aggressive selling of upside in Feb and March and Jan and even D's to a degree. So it is interesting. People are not reticent to pull the trigger on continuing to fade this. And that's been happening pretty much the entire ride up. So as we've seen with people getting, hurt a bit out there in products like VXX. So I think that's probably one of my number one, trade/trends for the year, Mr. Rock Lobster, from VIX land, is that just, even though we saw the return of vol in a very aggressive fashion, particularly yet again, it kind of faded again and got back hot again in the Q4. Shorting vol has still been kind of the trade du jour. I'm not saying effectively. It worked all right, but it had moments where you kind of had to dial it back, and unfortunately some people did not do that. But would you say that's still that be one of your trades of the year, trends of the year, or would you think it's something else out there?
Oh, it's the shorting vol trade? I mean, but think of the scars of people like with XIV and SVXY and all that stuff, where, they think that it's kind of a slam dunk because, everybody has like a recency bias. They forget that vol can do, the market can do just about anything. So for sure it was a trade. I think there's a lot more caution in it. And as we've already discussed, there's also quite a bit less there's quite a bit less of a less activity in the future space just because of those short vol products died. So I find that it's definitely changed Stripe a little bit, if anything.
Yeah, certainly not a good year to be in the underlying VIX futures business. As we've seen, you're right, those markets have never recovered from the end of XIV. Perhaps not a coincidence that the height of the SIBO stock around the 140 level or so was right back at late January, right before this whole madness set off. Now it's, about 40 odd handles lower, right around 96 today, when it hit a high of about almost 140, 138 and a half. So yeah, again, those VIX futures markets have just never recovered, and it's not just people don't want to buy vol; they do, despite what FT might say. But it's just the rebalancing is gone, and that has hurt a lot of people out there and a lot of businesses like the SIBO, at least on the VIX futures side. Another trend I kind of noticed in terms of activity this year, Mr. Rock Lobster. We've talked a lot on the show in the past about our old friend, the VIX 1x2. Usually it's a short 1x2, selling one and buying two. Excuse me. And usually it's done in the favorable environments, of which there actually weren't a lot this year. We still saw it printing, though, but not as much as it has in, let's say, other years. 2016 was a very hot year for the short 1x2. But when it's done, it's usually done in a relatively sane, shall I say, fashion, selling one near at the money, maybe slightly out of the money call, and buying two, usually, let's say, a few points away, 5 points away, somewhere in that range, 3.5, maybe 4, somewhere in that range to really keep the 1x2 shorts. You want to keep the risk of breaking through that aggressively to the upside without having your two kick in relatively minimal. You also want to keep your outlay pretty tight. And so the short 1x2, it's been a fairly effective trade if you want to keep your kind of table. It's a table stakes trade, as I talked about before. You want to keep yourself in the game until you get that big pop, right? And if you don't, it doesn't really cost you a ton, maybe even not much at all, depending on how you structure it. We've seen that trade continue this year, not to the degree we've seen in previous years, but it's still out there. And also, I think the trend for that one this year is that it kind of got wild. It got out of hand. I think people maybe started deciding, well, if I like it short 1x2, I got to like it short 1x6, right? And all sorts of weird. They started putting on the ratios to ridiculous extremes, which is kind of crazy in and of itself. But B, the part that I really noticed and really kind of alarmed me a little bit was that they started spreading it out super wide. These trades usually work best if they're fairly tight. You got to have not a ton of daylight between the strikes in order to really kind of get yourself set up for. Otherwise, it's not really going to kick in the way that you need it. And yet we're seeing people doing these things 10, 15 handles or more sometimes wide, doing it on crazy ratios like 1x6 and things. So if you do get the explosion, a massive explosion to the upside, that could come in, and the ratio to the upside could kick in and work out well for you. But there's a lot of scenarios where it could actually come back to bite you, where you're kind of getting a little move to the upside, but not a ton. Again, if you're still deft on the trigger and you take it off aggressively, it could still work out in your favor. But there's a lot more that can go wrong with that trade. So that's a trend I've noticed this year as well, Mr. Rock Lobster. Just the ratio verticals are kind of getting a little bit. I think what they're trying to do is they're trying to force it too, because it's not a favorable environment for it right now, and so they're trying to force this trade. They're doing it on funky ratios, and they're doing it way too wide. And I don't know. Have you concur with that one, Mr. Rock Lobster?
I have seen those. They're not my favorite trade, just because of you got to pay so much money for upside VIX calls, and you always have that annoying lag in the future. So you have this trade that always looks good on a trade platform, but since most of the trade platforms don't actually show any VIX deltas with any real sense of correctness on them, I've seen a lot of those, and I just think they have a hard time making money. I think people feel good about, okay, I'm going to sell some of these calls near the money, and I'm going to get this upside for a really cheap price. But then they realize it's really hard for those trades to really make a payout. And that's, I think, a lot of investors look at. They actually look at the sort of that end of year, that expiration risk chart, and like, oh boy, look at all the goodies that I'm going to get from this. But they're really not taking into consideration any of the any of the delta drift or change in vol or anything that really screws all of those things up. And it's rare that, okay, I'm going to have this position and I'm going to get all of the performance up until the very last day, and that's when it's really going to hit. So I always liken that to kind of William Tell, where can you shoot an apple from 100 yards with a bow and arrow? It's possible, but you're probably not going to do it. So I think any investor looking at those trades, you have to think, how actually is this trade going to perform for the whole time that I'm really interested in? Will the 6x1 work if you put on a 15-20 1x6 and VIX trades 30 and it's moving into the 30 handle? That for sure could work. But it's got to stay up there so you could get to close those things as the futures drift toward 30.
Yeah, that's the key. You got to stay quick on the trigger finger with these types of trades. And you're right. I think I can see why they're attractive. The premium outlay is not a ton, so you can put them on for relatively modest amounts, unless you go super crazy with the ratios. We've seen them the other way, of course, too. Some famous size earlier this year was the other way, ratio levered short to the upside, which we've talked about many times. That could be a recipe for wipeout. In fact, we did see a few funds go the way of the dodo this year. Not just in vol. We did see vol or in the Fed Aqualypse. A lot of them were over-levered to the upside, naked short units. I guess another theme of the year, I guess in general, was getting a little bit too crazy. Harvesting the risk premium could leave you on the sidelines, perhaps permanently. So we said it before, keep your risk mitigated. Stay with spreads. Try not to be naked short units, particularly to the upside in products like VIX, because that could come back to hurt you in all sorts of amazing ways. And we did see that play out, unfortunately, yet again this year. We also saw the infamous one on the nat gas side. That was more of just getting maybe a little bit too greedy on the premium harvesting side. Again, naked short units come back to bite you. You got that black swan kind of move. You don't cover your risk, it can come back. It's been unfortunately another one of those years with more reminders that short premium, if not done deftly and don't have a quick hand on the trigger finger, can come back to bite you in a lot of interesting ways. Speaking of trades that can come back to bite you, I mentioned one of the if there's a big narrative of the year, it was shorting vol, and one of the ways people like to do that is continued love for VXX downside puts. And, we'd mocked, a lot of you listeners would mock throughout the year. Why would anybody buy a VXX call? What's the point of having upside in VXX? I lost kind of how many questions we had. Who trades these things? Why do the calls even exist? And we saw this last month or so has shown you why indeed they exist. In fact, the VXX trade is doing so well this week, Mr. Rock Lobster, that even places like ETFtrends.com are writing treatises about it and how the VXX is up at the time of this writing, which I think was earlier this week, was up 77% year to date, up 83% over the past few months. Again, percent, I get it. Don't get mad at me. I didn't write the article. And they also quote some people who are just, completely clueless in the volatility space, like one of these Thompson guys, Matt Thompson. I'm not sure I never heard of him, but he sounds like a whack job to me. He gets the dubious honor of having to defend the long VXX trade. So he says the thing that worked in the volatility space this year is the thing that almost never works. Just buy and hold volatility. They called him up, said, "What do you think about buying VXX?" And he's probably like, "It's usually not good, but in this case it works." So he gets the unenviable position of defending long VXX. But in the last couple of weeks, that's been a genius trade, sir.
I know. I'm actually looking at for our the one fund we have, our BCE fund, where let's just say we have a little secret sauce recipe of long vol and long underlying, and yes, it has worked out. It's worked out okay. I don't have any complaints. So one thing to think about at the end of a year, when something has performed remarkably well, like blowing everybody's mind remarkably well, right? And you think, oh, this is going to do it next year too. So let's look at the end of 2017. XIV up 80% or 90% or something crazy like that. It had an enormous year, right? Like, oh my gosh, vol will never go up again, right? That was the that was the attitude even into late January, when we had increasing vol and increasing vol and increasing prices in SPX. Now we're at the end of 2018, when everything kind of blows apart. Nobody knows exactly why, but I'm going to probably lay a little bit of this on the White House, a little bit of this on the Fed. Definitely huge amounts of uncertainty. And then, of course, the product that thrives on uncertainty is VXX, because it lives on the vol futures, and the vol futures are continually backward because we have crazy and insane realized vol. Now, is that a once in a decade thing, or that might be once in, I'm trying to remember the last time VXX was up on the year. I don't think it ever has been. This is a once in I'm not going to say once in a lifetime, but it's certainly once in a decade event for volatility. Can vol keep going up? Sure. Can realized vol stay high? Sure. Can the stuff that makes VXX stay in an elevated, stay there for a longer period of time? Sure, but those VIX futures have to stay up there to make it happen. Now, here we are sitting at the end of 2018 when stocks are in the ash can and vol's in the roof. We're going to say, oh, it's probably going to happen like this next year the same way. You look at what we'll just call a once-in-a-decade performance by a product, and I'll wonder how many pundits are going to say buying fall for 2019 is going to be the thing, and are we going to get a repeat performance of this? I would say historically that has been a tough thing to replicate 1 year over not. That it doesn't mean it can't. And as a vol trader, I still believe that vol can keep going up until it stops. So when you're trading vol, you always have to have the idea in your back pocket that, this vol regime can hang around for a long time. Because if not, you could run out of money. So, but I look at this, I look at VXX doing something historic, and, just historic things generally don't happen twice in a year. So that's where I would be on the VXX thing. But I'm glad they picked on the Thompsons to defend VXX as, just buy and hold, buy and hold. It's like buying and hold an option strategy where you have continually decaying options, and it works. So it did happen. It did work, and it probably gives all the velocity shares guys, they can point to something at least and say, hey, look, see, it works.
It works.
Right, you guys
just ignore every other year on the chart
work.
and just look at this 1 year, and it's the product for you. Any other thoughts, Mr. Rock Lobster, on general kind of S&P VIX vol before we move into some other products?
Like I said, I think we have had historic high realized vol. It generally doesn't last, but we have 2 more years in this presidency. So now that the single-digit volatility myth is gone. But if you look at the things that created the single-digit vol, like what we thought, stable economic policy, if all these things actually sort of work out, where do we go? So I look at we do have some sort of China settlement, and the Fed maybe is not as hawkish. Where do we go? Where does the vol go from there? But I think the trade that still works the best is, even with vol at this level, you kind of want to have backspread type positions, because just the breadth of move and everything is so huge. We're talking 15, 18% market moves over a 1 week period of time, stuff like that. Stocks moving, 8 to 10% a day, like bigger stocks like Apple or Google, or in like a 3-day period, they're moving 10, 15%. So these are stocks that usually trade at, barely double-digit vol, 11, 12 vol stocks that are just insane. So the market almost can't charge enough money for volatility for the amount of these things are moving. So that would be, I would say, that theme is going to at least carry into January 2019. It's not going to go away. So just be careful when you just take out your vol selling hat and start just slamming down call contracts, because the rips could get really vicious if they happen. So I still think backspreading is the way to go in this market until things come down a little bit.
But Mr. Vol, you haven't seen my vol selling hat. It's actually quite fancy. You may change your mind when you see that hat. You might say, wait a minute, you have to wear that all the time. Because that's about as fancy. It's got, little epaulets coming off the side, go down to the shoulder. It's really fancy. You'll have to see it one of these days. All right, moving on to some other products. We want to get to our crystal ball and all the fun we got going on there as well. Let's see. Other products in terms of volatility. It was an interesting year for vol kind of across the board. We saw another narrative out there. Let's look at commodity vol, for example, in crude land. Commodity vol was pretty boring for the better. Crude vol in particular was pretty boring for the better part of the year. If you look at things like OIV, which is, of course, the VIX of WTI, you'll know it kind of hovered around the mid to low 20s for the better part of the entire year until mid to late November when, of course, OPEC came calling again with their talk of cuts and madness. And, if you follow the price action of WTI this year, it's been kind of a crazy year. We saw a couple of years ago, we saw the big sell-off from north of 100 back down into the 40 handle again. And then this year, we saw the rally. You saw the 40 back up to the mid-70 handle. Everyone thought, okay, the price concerns of WTI are over. We're back in this higher trading range for WTI. And then it just immediately retraced to the downside, despite OPEC's efforts to try to prop it up with some production cuts. No one was really buying what OPEC was selling. We saw one of the, if not the fastest moves from the mid-70 handle down to around the mid-40 handle. So a 30-odd handle sell-off in WTI in the span of just a few weeks. It's just been record unprecedented times. And so we've seen the OIV spiking up to over the 60 handle at one point. Right now, right around the 54 level out there. And it's still more than double kind of the average level it's been hovering around for the better part of a year out here. So it's been fascinating to watch. The story, for most of the year was kind of, can crude vol catch a bid? And then the second part of that was, can it sustain it? It caught a few bids throughout the year, but it was always very short-lived, and then it would come right back off again. And the answer to the latter part of that question is, yeah, it can right now. It's sustaining the vol, as we saw, pretty extreme event risk and still a lot of uncertainty as, the global trade war and the concerns over macro demand continue to weigh on all things crude. If you listen to Twifo, that the bid to the puts has been to the downside for some time, and as we continue to move into that area, the vol is going to stay juicy. So that's been kind of the story of crude vol, kind of a boring story until Q4, and then bam, it exploded to life. It's kind of a reverse of that story for gold vol. The narrative from pretty much all of 2018 and continues to be in gold land is, can gold vol catch a bid? You can look at catch a bid, I should say. If you look at gold a lot of different ways, let's stay in the VIX land. Let's look at the gold VIX, aka the VIX of GLD, aka GVZ, and it's been hovering kind of in the 10 to 15 range for the entirety of 2018 as well. Been very range bound. On one hand, you could say, well, that's great for premium seller, people trying to harvest that. On the other hand, it's so anemic that it's not a lot of premium really to harvest. And on the flip side of that, and my co-host Nick on Twifo has argued that very well throughout the year, that it's so low that if you do some deft gamma scalping around it, you can actually do well, or as he likes to say, pay the rent. And that's kind of been, particularly when it's hitting like the 10 level out there, as it has multiple times this year, that's when it's one of those things where sell or not sell. You definitely don't want to sell at those levels. So gold vol has been kind of this weird story. It's kind of hovering actually a little bit higher right now, right around a 14 and a quarter or so. It's got as high as 15 recently. So it got a little bit of life lately, as you might imagine, as gold kind of popping with all this big sell-off. But again, kind of like the story with crude throughout most of the year, it's been a story of going up and coming right back down from a vol perspective. And so far, it's still up, but it's already coming off another handle out there or so today. So I don't expect this latest move in gold vol to be very structural or long term, but crazier things have happened. But I think the narrative for gold vol at least has been, it can't maintain a bid for any foreseeable amount of time, and we'll see if that continues into 2018. Rounding out our crypto vol before we get into our just palooza of crystal ball madness. Crypto vol, it's funny, coming into this year, it was all Bitcoin, and the talk everywhere it was actually a joke for shows like Silicon Valley, that Bitcoin is just the most volatile thing on the planet, that crypto, in particular Bitcoin, have all the vol. And yet, when you crunch the numbers, it turned out not so much. In fact, again, our buddy over there on Twifo, Mr. Nick Howard, of Bantix fame and Quick Strike infamy. Check out, they have great data, actually. People want to know where the Bitcoin data is. Nick and his team at Quick Strike have it. Check it out, Bantix.com. is the place to go. Or give them a follow, QUIKSTRIKE1, Quick Strike 1 on Twitter. They tweet out a lot of these good charts. And he sent us some great data on Bitcoin volatility, and you can look at it for yourself on Bantix. We'll maybe try to post some in the show notes. But yeah, effectively, Bitcoin vol had a band of about 40 to the downside, a little bit shy of that, except for one moment. We'll get to that in a little bit. And about 90 odd or so to the upside. Right now, it's actually a little bit north of that. It broke through to about 120, almost 130 very recently in December, as we had some big moves of late. But right before that, we saw big moves to the downside, meaning gold or crypto vol was pretty much had fallen off a cliff. It was down to about 20%. So this last month or so, it's had a huge move from about 20% of the downside up to over 120% actually. So the last month or so has been extremely volatile in crypto lands. We've seen it vacillating through the 4,000 handle to the downside and then to the upside. But outside of that, it's been actually fairly range bound. And in fact, most of that average time, the vol is around 60%. So the perception of Bitcoin being super volatile, last couple of weeks notwithstanding, it really isn't as crazy volatile. It's not much more volatile than your average, somewhat volatile equity option, which is around 60%. In fact, if you want to look for where the vol is in crypto land, you got to go a little bit farther afield. Things like Ether had a range of about 75% from vol up to about 120% with some breakouts to the upside and downside there as well, about 140% way up on the upside. But most of that time, and they were averaging somewhere a little bit shy of 100%, about 96% in terms of average out there. And Ripple, another one, XRP, much cheaper price, so you're going to see a lot more volatility out there. And they delivered out there in spades, hovering from about 90% up to about almost 160% out there with an average somewhere around 120% or so. So almost 2x the average vol of a Bitcoin contract throughout the course of the year. So if you're looking for volatility, it can be found in crypto. You may have to just go for a little bit farther afield than some of the big coins out into the altcoin universe. If you want to see altcoin, Litecoin as well, averaging about 70% on the downside up to about 15% on the upside or so, with an average somewhere around 90%. So all of the altcoin delivering a lot more structural vol than Bitcoin right now, but also Bitcoin the most liquid. So a little bit of a combo there. If you like that kind of stuff, you want to dig into more of it, and stay tuned. Coming up not this Friday, next Friday, or a week from today, we'll be launching our new Crypto Rundown show. So we'll get into all that stuff in a lot of detail with our friends over there from Acuna Capital. Should be fun, so stay tuned for that. Meanwhile, it's time for the part we've all been looking forward to and or dreading, the hardest crystal ball of the year. It's time for our 2019 VIX year-end prediction crystal ball palooza.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, listeners, our crystal ball of the year is auction opportunity for you guys to win fabulous prizes as well. Head on over to @options on Twitter and play along in our poll. You can vote there for the range, but the important thing is you have to give us your specific guess for where VIX will close. VIX Cash now, not the futures or anything, just good old movable crazy VIX Cash, which makes it even more challenging. And where it will close on the 31st of next year, or whatever the final trading day of the year is, and then we'll get all those votes put together, and we'll put the winner within a point. We'll get the final, the big prize, fabulous prizes. So all sorts of fun stuff. A lot of you guys have been already firing off your quotes or your predictions. I've tried to avoid all of them because I don't want anything really coloring I've been thinking about this for a couple of days, Mr. Rocklops. This is the challenging one. We're not predicting next week or even 2 weeks from now. We're predicting the end of the year, which is challenging. And as some of our listeners have chimed in on, like Pat Hennessy, he says, what about a better way to look at this is, he says, what will the average VIX be based on daily close for 2019? And I get you. That is maybe an overall better way to gauge, because people are saying, well, otherwise you're just kind of dealing with December kind of sentimentality and how that's what you're predicting. And yes, that's true. That's kind of what makes this so challenging, is because you kind of trying in your mind to look at the currents we have going on right now. You're trying to weigh the macro currents that could be weighing on the market next year versus the usual typical seasonality of VIX that usually plays out this time of year, which is VIX is usually in its nadir around this time because there's not usually a heck of a lot going on. There's usually not a lot of volatility going on. So you're trying to weigh these two things, which was what makes this one extra especially difficult. But I like your idea. Maybe we'll use that for a future one. I guess if you want to weigh in. Mr. Rock Lobster, I will be charitable. I've been thinking about this for a while. I think I've come down on the side where I want to lean. So I will be charitable. I'll be a nice host. I will allow you to choose whether you want to go first or you want me to go first.
I will go first.
Oh, look at you. Taking the bit in the teeth.
Your opinion means nothing to me, so I will just steamroll your opinion.
All right, have at it, sir. The floor is yours.
I'm going to say, I think I said 1601 VIX.
Interesting. 1601. I'm going to put you down right now. We got to get the meatball on quoted for this too. So you have 1601 for the close of VIX Cash in 2019. So I've been vacillating myself on this. I can see obviously a lot of arguments for a lot of different regimes. Obviously, 2 years ago, we saw VIX completely at its nadir, not a lot going on, completely anemic, threatening single digits, all that craziness, which is seasonality to this extreme. This year, the macro trends are laughing at all things seasonality of VIX and saying we're going to do our own thing because we have a market shutdown, we have a trade war. So you're kind of guessing and betting on the wild cards, and usually I would weigh on a much more, saner heads prevailing. But I'm thinking, and the way I termed it in our tweet was I gave you 4 zones to kind of play with, listeners. And I came up with four genius zones. Mr. Rock Lobster, you should really check these out because these zones are kind of genius. Only a true vol genius could come up with zones like this. I came up with a low, which is about 8 to about 11.99. Then I said normal, which is about 12, just about 17, 16.99 on the upside. Then elevated, which is about 17 to about 23. And then there's very elevated, which is north of 23. I think you should take notes on that, Mr. Rock Lobster, because I think those zones could be useful for you in your future work, particularly with your vol newsletter. So I gave you 4 zones, and I was thinking to myself, where do I feel it will be this time next year in those zones? And I think we're going to be in that elevated zone, but just ever so slightly. I keep coming back to this one number in my head, and that is 1710. So that's where I am. It looks like we're actually kind of close, Mr. Rock Lobster. I thought we'd be farther apart than we were. But I'm feeling 1710, so not quite the low teens you may feel usually that time of year, the seasonality, but not quite, not rock'em sock'em north of 23 either. Saner heads prevailing, but not super sane. A little bit of madness still in there, Mr. Rock Lobster. That's why I feel a 17. Do you want to do the average for the year too? Should we just be nice to our listeners, or should we just say the hell with it?
All I want to say is you stole my zones and then you lead on my 1601.
I created the zones first off, independently of any madness you may have thrown at me.
Stole my zones and then you leaned on my bid.
It was scum
to me,
sir. It was great vol minds.
Scum to me, sir.
Great vol minds think alike, And this, you've been around the vol space for a while. The zones just come naturally to you. And of course, I gave them real names as opposed to whatever the hell you call them. So you can learn a lot from my zones, is what I'm telling you here. But it is funny that they lined up almost exactly the zones. But I'll be nice. I'm thinking the average for the year is going to be somewhere around what I was feeling as well. I'm going to say my average for the year is going to be, let's somewhere in that range. I'm going to say maybe a little bit north of that. I'm going to say like 1760 for the year. I'm feeling the 17 handle kind of across the board. So we'll have some vacillation, some north, some south, but somewhere in that would be my average for the year. If you don't feel comfortable giving an average for the year, Mr. Rock Lobster, it's all right. I won't judge you. Maybe just a little bit.
Nonsense. I'm going to go with my theory that this year is kind of unprecedented volatility, so next year probably will not be. So I'm actually going to say somehow the average will be slightly below my end of year number. I'm going to say 1499.
1499. All right, interesting.
Which is kind of bold considering we're starting the year at 30.
We're starting at 30. Yeah, there's a lot to go on the yes. there. Maybe you should review my VIX zones before you make such an outlandish prediction.
Yes,
And a lot of you guys have a ton of you have fired in. I don't know if I want to read all of them because I can't. There's too many. And B, I don't want to color. You guys, this poll will be up for a week. You get to play pretty much until almost next week's vol view. So we'll be very nice. We'll give you a week to think about it, do your analysis. If you want to weigh in on both, maybe we'll give bonus points for the average too. I think that's a decent point. Some people don't want to just pick sentimentality or seasonality. They want to just pick for the year. So I feel it. But I'm looking here at these ranges, and actually it's like a lot of people are kind of feeling the range that I was feeling, which is kind of the mid-teens here. But there are some outliers there. We got FContangotrader. He wants 32.5. So he's thinking we're going to be rocking even more crazy than we are right now. Brad Huff, 27.25. Our buddy Ophir is at 25.5. I don't know Andrew Nightingale. I don't know him. He's on 32. Some guy, Andrew Giovinazzi, 16.10. I don't know him. Trading Vol says 24.5. So there is some upside. I shouldn't say it's all just downside. There are some people feeling upside here as well. This guy picking a high of 63.2, but he's got a range here. I don't know what he's doing. So all kinds of craziness. Get your vote in on at options right now, listeners. You can vote in the poll, but that doesn't register you to win. To register to win, you have to do what we just did. You have to go out on a limb and make a very specific pick for where VIX Cash will close in the end of 2019. And if you do so, and if you're within a point, you can win fabulous prizes. All right, listeners, that music's playing one final time here for 2018. Again, you guys keep your picks coming. There's a bazillion of them. I purposely avoided them before I made my pick because I don't want to color myself. I don't want to read a ton of them because I don't want to color the audience. I want them to have their own thoughts. But we'll kind of do a rundown of them maybe next week on all kinds of predictions here. It's really fun to see what you guys are. This guy here is picking an average of 28, Mr. Rocklop. So he thinks we're going to be just freaking off the cliff, off the charts, I should say, to the upside. So yeah, your picks are all over the place, which I love. So keep those picks coming. We'll have to get the meatball on the hook too, so he can be officially registered to play. But yeah, ad options is the place to do that. This poll itself, we got about a week, 6 days or so to go play, and then the poll closes, and then the votes are tied in, and then 12 or so months from now, we shall come back and we shall see, provided asteroids haven't slammed into us by then, we shall see who the great winner is of, remember, you gotta be within a point. Otherwise, no mas. All right, Mr. Rock Lobster, as we round out the year here, what can people look forward to coming from you guys in the pit here in 2019?
Options Made Easy will be for late Jan, early February on how to position long-term with options. The stuff you need right now, it will be brought to you, 5-part class. You're going to love it. It will easily save you the money it costs. Also, if you don't want to be a vol lemming, subscribe to my newsletter. Keep me in the lifestyle, which I have grown accustomed to, and learn how to trade volatility. I think it's like $89 a month or something. So if you can't make that much money using my vol newsletter, you might as well hang up your shoes and go do something else.
So the lifestyle you become accustomed to, so a recluse on the fringe of civilization, is that what you're saying? Keep them accustomed to that?
Exactly. I only need about $99 a month.
There you go. That's all it takes to live out there.
It's easy. Just need one or two.
You just got to have enough juice to power the one stoplight in town and Andrew's computer, and you're good. Everything else is kind of just gravy. So there you go, listeners. A lot of fun stuff. Keep an eye on it over there at optionpit.com to learn more. And if you have a question, maybe you want to see what he's thinking throughout the week, give him a follow at OptionVol. His handle should be the Rock Lobster, but it's OptionVol. We only can do so much here, listeners. Give him a follow on Twitter. You can see what he's tweeting about throughout the week. We're trying to get him to tweet a little more, so he's putting a little bit more out there these days. Maybe some tweets from the newsletter. We shall see. Meanwhile, though, listeners, we got to call it there. Thanks to everybody who's played already, and for all of you who are coming to play. Of course, thanks to all of you who've downloaded, streamed, listened, sent in questions, downloaded the show. Everything you guys did, ask questions, throughout 2018. We love you guys. You guys are quite literally the reason we do this, and we keep doing this, because we love you. So thanks for listening, and we'll see you back here next year for more Volatility Views.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/The Options Insider, or via questions at theoptionsinsider.com.